Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the forex markets. As euro currency is continuing its climbing higher and higher, so I think that Friday is the day where we could take a look at our trading plan that we have created in the weekend. We have talked on the Great British Pound, and today I think that we could discuss this currency, especially because the market has shown this real significant progress since the last time when we have taken a look at it. So today the update and video will be a bit more expanded, and we will start from the weekly chart. As you can see, on the weekly chart, market has reached our targets 155.50 confluence resistance. On the weekly chart, although we have thought that this will be a bit later and the market will not show such fast action, so we think that this target will be hit a bit with a longer period, but cable has shown really fast action and has reached this target within the week. This is not quite typical for the financial markets, because you can see that that Great British Pound will have to move deeply inside on the overbought condition. So you can see it's not really very typical. So you can see here previously, yes, market has pierced this overbought, but most of the time it stands below, and the financial markets has some feature. They usually never stand deeply overbought and oversold for a long period. They feel very uncomfortable standing in overbought and oversold condition compared to commodities. Commodities could stand and move even beyond the overbought and oversold levels for a long period, but financial is quite not that tune. So, but here we see that this action was really significant. You can see this really deep penetration of this overbought line, and it means that this action to the upside has some significant background, some significant foundation. It's not just some retracement. It some kind of some new thrust. Maybe this will turn to even new bullish trend in the medium-term perspective. So this action really gives the confidence and encouraging that market really could continue move higher in the nearest future. But meantime, right now, in fact, guys, we have here the bearish stretch pattern on the weekly chart. The bearish stretch suggests the deep retracement, and usually when the market stands in the overbought, the retracement usually deeper as just some free space when the market is not at the overbought. Here, guys, we need only two moments on the weekly chart. First one is this, as I said, this combination of the overbought and confluence resistance in 55.50 area. We even have marked it with the arrow on the previous weekend. Second moment, keep in mind the level of yearly pivot support runs, 49.77. That we will need it on the lower time frame charts. Now let's go back to the daily chart. On the daily chart, here's the picture that we have drawn a week ago. We have suggested that that will be our destination, since this is the neckline. And market could form the reverse head and shoulders pattern on the daily chart. That will put the background for possible deeper retracement on the weekly chart. From that standpoint, as market is overbought on the daily time frame chart, on the weekly time frame chart, that is the confluence resistance stance. Okay, we could suggest that retracement probably will be deeper. From that standpoint, the level 49.21, 49.90 is a possible target of this retracement by some reasons. First of all, if market is really forming the head and shoulders, it should keep the harmony of this pattern. It's approximately, it should show the 618 retracement down to keep the ratio between the shoulders and the head is 1618. That's the first reason. Second reason, as I said, is that market at overbought, and that's where retracement should be deep. And finally, 49.77, as we have seen on the weekly chart, is the yearly pivot support one. So it also will provide some support here. This will be a significant level. The one risk factor right now that I see is that market could turn down, not just from this level and continue to move lower, but it could make the attempt to move slightly higher before the final reversal will happen. And here's the reason why I think that it really could happen. That's the risk. It's on the 4-hour time frame chart. Take a look. That market right now is forming ABCD pattern, and it hasn't quite reached the 1618 extension of this pattern. That stands approximately at 56.30 area. Also, the 1618 extension of that retracement also stands in this area. So if we suggest that market, for example, will form here some butterfly, it could complete the butterfly and turn to the down after that. Okay, here's approximately, as you can see, the harmonic swing of that retracement, and that is almost similar. Another reason why this could happen, because if you take a look at the weekly chart again, you will see that the level stands approximately 55.63, 55.67, slightly higher than this low. And on the 4-hour time frame chart, as you can see, this levels approximately stay in the same area. So theoretically, there's a risk exists that market could show another final leg up before the retracement will start. That's the risk of the current setup. But currently, guys, it's very difficult to promise that and to tell that this really definitely will happen. Mostly because market stands deeply in overbought, and in such circumstances, it's very difficult to promise something. Maybe market will turn down even from that area. The one moment how you could clarify this and how you could resolve this problem is to wait the clear patterns. So, for example, if we'll take a look at the daily chart, you could see. I will drop down the astrology predictor. Just a moment, we will put the 3x3 moving average. So, guys, for example, here we have a perfect thrust up, and by itself, this is the context for the possible directional pattern. That could be, for example, the double repo. If market will form the double repo and will form slightly higher second top and hit the 55.50 area and turn down, that really could be the clarification. So this will just bring the transparency in the current situation. It will say, yes, currently we have the reversal pattern in place, and we could take the position in expectation of 49.20 target. That's the one moment. Here you also, guys, could get, for example, the Brent bottom. If market will show the deeper retracement here from that swing, okay, just to correct, to exit out from the overbought condition, and later we'll try to show upward continuation and then turn down. So you can see this area is an area where you should keep an eye for the patterns. That will tell us whether market will turn down right here or it will continue to move high and will finally hit the 55.60 resistance and complete these targets. So currently it's 50-50. So we can't exclude that market really could continue to move lower, right to the 618 support. That's also could happen. Well, if you would like to take the short position based on stretch, that will be a bit not really very attractive. This could be done, but it will be not very attractive because if you would like to take the perfect trade, you need to place stop above these levels. Because if market will return to this area, so 156 approximately, hit these targets and turn down after that, this will not break the short-term context of the possible deep retracement. That will just postpone the level and move it a bit higher where the retracement will start. That's why the hitting of these levels will not mean that the bearish retracement, bearish context in the short-term perspective will fail. But if market will exceed it, that will be another question. That's why if you'll take position right here, you will have to place a bit higher stop order highest upper ever. And compares to target, so we have the target at the 49.20, it's approximately 53, 49.20 right here. Well, yes, the profit is a bit greater than the risk, but this almost 10 1-on-1, so 1-to-1, so not very really attractive. Another solution that you could take, for example, you could watch for hourly chart. On the hourly chart, this is important area. It's around 54.15 area. It's a 618 resistance of the recent move down. Why this is important? Because when the market forms such sort of shapes, some kind of not quite the double top, but some sort of the consolidation, and then when it breaks down, the market will protect this area to prevent the price returning back above it. You could use this area as the beacon. So if, for example, market will return right back up, it will mean that chances on hitting that area will significantly increase. That market really could continue move higher. If this will not happen, this market will probably drop lower, right, and will continue move with this our head and shoulders right to this area. That's also possible. So as you can see, this multiple solution exists, how you could act with this situation. But one thing is absolutely looks absolute is that cable right now provides a lot of chances for trading, as on the daily, on an intraday charts. So on the daily, you could watch even for multiple patterns. The first one is big pattern, is head and shoulders. The minor patterns are, you can see this could be the double repo, brand body sell. If market will form something on the hourly chart, maybe butterfly, you could watch for the butterfly here. So as you can see, the patterns on any taste. So on the weekly chart, this is weekly stretch pattern. Besides, if you would like to trade the weekly stretch, you anyway will have to place the stop above the confluence. So that's absolutely the same approach as you would like to trade the short entry on the lower time frame charts. So as I said, just maybe hourly chart will help you somehow to watch for this area. So anyway, guys, the first step of our trading plan has been completed. Market, let's say that it has reached our first target is in the 55.50 area. Despite that, maybe it will show another last leg up based on the analysis that we just have discussed. The second step of our trading plan, the major step, is to wait when a retracement where we will take the long position. And that retracement probably will be this one, right in the area around 49.20, 49.50 area, somewhere in an area of the shoulders bottom.